Good morning, everybody. It is Wednesday, the 28th of January. This is the Morning Blast with myself, Ryan, and of course, Michael. As usual, we give a candid market podcast on what's been occurring, what to look out for, a couple of rants, probably go off topic a few times. Friendly warning, there's no editing goes on this. So if you are listening to this on podcast rather than live, you get the same experience, which means it can get a bit weird, plenty of swearing, etc. So not for those with sensitive ears and dispositions. Nothing we say is trading or investment advice, yada, yada, yada. Michael, how are you?
Good morning to you, Ryan. Very good morning, everyone. The cable is north of 138 at a 5-year high. The UK economy must be booming. Rachel Reeves, thank you very much.
Don't even joke about that because some people might either think that we are talking the truth, or worse, it's not that far away that she might think she's doing the right thing.
Well, do you know what? I have spent a worrying amount of time refreshing Tris Osborne's Twitter feed over the last day or so, to just waiting for the inevitable victory lap. Just to be clear, in the same way that the FTSE has no bearing on, what the UK economy is doing, the value of the pound has very well, at this moment in time, certainly has absolutely sod all to do with what's going on in the UK.
And we are going to come on.
And we're going to discuss that later on.
Yeah, we're going to come on to why the dollar is weak. And obviously that is part of the equation on why dollar pound is moving so much, or pound dollar, whichever way you want to look at it.
Do not ever quote it that way round again.
No, so as soon as I said it out loud,
what on earth is wrong with you? Well, actually, quite a lot. We haven't got time to go into.
Well, quite, and I'm really not feeling great. I still can't shake whatever's going wrong. But I think nothing a few pints tomorrow won't sort out. Anyway, speaking of pints tomorrow,
cures all ills.
It does. Pints of what, though, you ask? Well, that's one for another story. Another day. Right, market update from our dear friend Clive Lambert, who will be buying me a pint tomorrow. Today's wrap, obviously, as we know by now, is Clive Lambert Futures Techs.
Whatever his fucking company's called.
Mate, honestly, I'm in a really bad way today. I've not slept. When I did, it was terrible dreams, which we won't go into. But anyway,
I was going to say, we're leaving that one right.
Clive Lambert from Futures Techs, his market update and levels to watch. As he says at the start, today's wrap is mostly brought to you by the phrase new all-time highs. The S&P made new all-time high overnight with 7,043. Was the high as he went to print. Obviously, depends on when you listen to this, depends what the high might be. DAX is holding on to its Marubuzu support of 24,847 to keep us sided with the bulls. Eurostoxx, it did spike through the gap resistance earlier on this morning at 6,019 overnight after this way to the tick yesterday. Clive's calling it a technical event. It was the ASML earnings came out, which massive beat on bookings and stuff and orders. Although quite interestingly, massive beat on all. So obviously ASML, who make the fabricators for the chips, etc. Like they're the people that make the shovels, basically, aren't they?
Well, we were actually just sat at the desk, and they were being talked about on Bloomberg, obviously, and I said, and I stand by this, I think that in my view, ASML are probably the most important company in the world right now.
Oh, absolutely. I think that's been...
Because they are the only people who make these, what's the word?
Well,
lithography machines that are used to then make the chips, which then go into all the GPUs and power the data centers and, allow us to make AI pictures and jokes.
Yeah, they're the people that make the shovels. If you think about it, shovels, it's like people say, in a gold rush sell shovels, but these are people that fucking make the shovels.
Yeah, exactly.
So, anyway, so they had really good earnings, although they did announce great earnings and great order book, etc. But they're also cutting 1,700 staff, so fair play to them. But anyway, so Eurostoxx has been...
Maybe they're using AI now.
Yeah, exactly. Eurostoxx has been pulled around by that this morning. It's also come back off the highs. FTSE futures reached 10,223 overnight. The all-time high in that one is 10,261.5. Bund futures, German government bonds posted a doji yesterday and has bid so far overnight. This might just be a selling opportunity. It might not. Dollar yen's going again, down to 152.09, lowest level since October. Eurodollar got up to 1.2083 yesterday, trading at levels last seen in 2021. Bitcoin joined the party. It was at 89,000 as Clive went to print. Obviously more to do with dollar weakness than anything else. We spoke exactly about this yesterday. Weak dollar means things denominated in dollars tend to go up. Literally yesterday.
Like the pound.
Yeah, exactly. Gold has rolled to April and is making new all-time highs, approaching a channel resistance on the weekly chart at 5,329. Silver, another volatile day yesterday and is topped for now. Well, let's see how that goes. In overnight trade at 116.16, just shy of its all-time high from Monday at 117.70. Again, depending on when you listen to this, it might all be changed. One thing to note on silver, CME did up the margin from 9% to 11%, I think it was 12%.
I wasn't aware. I feel like I should be aware of that, but I wasn't. So
I've actually just tweeted
bringing
it.
me up to speed.
11%. And just to make sure I actually did tweet 11% and not 12%, because for some reason 12's in the head. No,
11%, yes, Clive tells us.
Yeah, no, it's 11%. I did tweet it as well, so give that a repost. Platinum.
Where would we be without Uncle Albert?
Well, exactly. Platinum posted a bearish engulfing pattern on Monday, but didn't follow through with anything of note to confirm yesterday, so we stick with the bulls. I'm guessing he's WhatsApping you.
Yes, and I can't say the word he sent me.
Zinc at 2-year highs after rallying overnight. Zinc, we haven't heard that in a while. LME aluminium is also waking up, hitting a Fibonacci target of 3,312 this morning, the highest print in that one since April 2022. Brent and WTI, that rallied neatly yesterday. Brent has rolled to April now, trading 65.85 to 88, is a key support in Brent today on any weakness. Henry Hub holding support at free spot 654 to 64. TTF, obviously Henry Hub, we're going through the roll on that as well, so that's March, not Feb, so ignore Feb. You'll see Feb prices being posted because that's got fuck all liquidity and fuck all open interest, hence why it's wanging around. But yeah, for the actual price of what's actually trading at the moment, look to March. TTF is still bullish despite posting a doji yesterday, obviously TTF being European gas. Wheat is back above its back above 525 this morning, so the bulls are very trying. Boom, boom. Oh, that's awful. Soybeans rallied after holding support at 1,059, which is nice. I'm actually long corn, so I would hope that one starts going up. But anyway, Michael, thanks. Well, firstly, thanks, Clive. Michael, what's happened yesterday? And then we can crack on with our topic du jour.
Yeah, indeed. Just a few things to pick out from yesterday. Actually, I'll save the majority of the most important parts, which are obviously Trump's remarks on the dollar, for our discussion momentarily. But on the data front yesterday, we did have a few things out of the United States. The weekly ADP employment report, which they're obviously publishing every Tuesday now, that pointed to private payrolls having risen by an average of about 8,000 a week in the 4 weeks to January the 3rd. Again, implying that the labour market is still just in this slow hire, slow fire mode. But what is interesting is we're starting to see that labour market fragility impacting consumer confidence. The consumer confidence numbers from the conference board yesterday were pretty dire, if I'm being completely honest with you. The index coming in at a much below expected 84.5 in January. That's down from the prior 89.1, and actually the lowest level since all the way back in May of 2014, which is clearly, consumers are more pessimistic now than they were during the pandemic. I think a big proportion of this is because of what's happening in the labour market. If you dig into some of the labour questions that they asked in that survey, consumers are very, very downbeat about their prospects in terms of finding another job or in terms of negotiating pay increases. And that's obviously dragged the headline consumer confidence metric lower. The question, of course, and this is something we've touched on previously, is whether that feeds into a slowdown in consumer spending. And actually, the signs you would argue are that it won't, because consumer spending is being powered largely by those in higher income quartiles, and that hinges much more on the wealth effect, i.e. where stocks and property prices are, than it does in terms of what's happening in the labour market. But nonetheless, it just kind of speaks to this idea of a K-shaped economy, which is a narrative that people love jumping onto. And I'm also mentioning on the off chance Dario's listening because he absolutely hates it. And other than that, we did have some Treasury supply yesterday, the 5-year sale tailing the when issued by 0.3 basis points, which isn't great at first glance, but it's in line with the 6 auction average. So I don't think we need to be too worried about that. Of course, we get 7-year supply on Thursday, not today because we've got a Fed meeting. So that comes on Thursday. Thursday. On the trade front, we heard from Canadian Prime Minister Mark Carney. He said that he had had a good conversation with President Trump. That, of course, comes after the threat of 100% tariffs on Canada that was made over the weekend. Interestingly, we have not heard a single peep from President Trump on that matter since the Truth Social post that he made over the weekend. So I'm not going to say it's a taco moment. It just seems to have kind of died a death and everyone's got bored of it.
So I actually take umbrage to the whole taco thing because it stands for, was it Trump always chickens out, right?
Yeah.
But most of this time, it's not him chickening out. I don't get me wrong.
It's actually just the way that he negotiates.
Yeah, it's like, this. Yeah, we see all the time. It's not chickening out. It's like literally post stuff just to keep people on their toes after time. And just it's something supposed to. Yeah, don't make me defend Trump, but it's far from him chickening out on what he says. This is just his playbook, and he tends to get what he wants of what we've seen so far on everything, basically.
Yeah, and at risk of repeating myself yet again, go and read the fucking book because he explains how he negotiates things. And frankly, a year and a fortnight into his president's second term, if you haven't done that now, then you shouldn't be involved in markets. But whatever. Speaking of negotiations, Carney was also saying that they're going to start talks on a formal review of USMCA in a few weeks. So we will obviously keep a bit of a close eye on that one. Other bits and bobs from yesterday, AI fundraising, that continues. Anthropic, apparently they're going to raise 20 yards and it will value the firm at $350 billion. All of this is getting kind of ridiculous at this point, but it speaks back to what we were talking about, what you raised previously, Ryan, around, they kind of need to just keep throwing out these good news stories to keep the enthusiasm going. In a similar vein, SpaceX, according to the FT, you honestly could not make this story up. I'm just going to read this verbatim. SpaceX weighs June IPO timed to coincide with planetary alignment and Elon Musk's birthday. That's just about the most Musk thing that you can imagine. Of course, people will be watching where that IPO takes place. There is a lot of chatter, particularly among us, that that could take place on the new Texas Stock Exchange. Yep, that's absolutely the one. And lastly, before we move on to our discussion, because it will lead us quite nicely on, we did hear from the Japanese finance minister yesterday, Katayama. She was saying that they had hosted a G7 finance ministers meeting, which got everyone very, very excited until it would determine that actually it was on the matter of Ukraine. But separately, Katayama was saying that they are taking appropriate steps on coordinating foreign exchange with the United States and that they will take action in line with the US-Japan FX agreement, which feeds us into nicely, actually, to what Trump was saying about the dollar yesterday, because it does appear that we're in a world where decades of a strong dollar policy is kind of morphing into what I would rather not very catchily call a less strong dollar.
Oh God, we need to work on the marketing for this, definitely.
Well, it's not a weak dollar,
no,
but it's not a strong dollar. It's kind of a feeble dollar.
Oh, well, I would say feeble's worse than weak, but there we go. But you're quite right. So for those
meek, let's go meek dollar. Let's
meek,
go with
meek dollar. That's better. So yes, for those of you who don't know, obviously the dollar's been suffering recently, and Trump came out yesterday. Quite an odd quote on face value, but looking deeper, it might not be so odd, and it depends on how it's framed. So basically, Trump came out, he was given an interview, and he was asked if the dollar's recent decline had worried him, and Trump replied, "I think it's great. The dollar's doing great." He then went on to say, "I want it to just seek its own level, which is the fair thing to do. I could have it go up or down like a yo-yo." And basically, to make it very, very clear that he doesn't, right now, he's not really too worried. Well, that's what he's saying at face value anyway. That the market obviously took that as Trump's got no motivation whatsoever to prop up the dollar, which is why when he said this, the dollar took another leg lower. Now, before I pass over to you, Michael, obviously we know also that, dollar denominated assets are going up as dollar comes down, and obviously he's long a lot of gold. It's bloody taps of gold. So there you go, that's helping him.
Now we know why.
Well, exactly. Well, jokes aside, maybe it is. But one thing I think is worth remembering is this whole Mar-a-Lago Accord. that we heard of, in 2024. In fact, it was November 2024. Our good friend and PIQ's good friend and follower,
Oh, no.
Stephen Mirren, now chair of the Economic Council, now chair of the Council.
Well, he's now at the Fed, isn't he, temporarily?
Advisors and on the Fed. He wrote he termed the Mar-a-Lago Accord, and this paper was titled "A User's Guide to Restructuring the Global Trading System." It sounds like one of Michael's notes. The central thesis.
It's actually quite an interesting paper, to be fair.
There you go. I told you. But the central thesis around this is that the dollar is structurally overvalued because of the global demand for reserve assets, etc. And in Stephen's view, is that the US effectively subsidies the world for an overvalued currency and military protection. And the fix is to deliberately weaken the dollar to a fairer level whilst preserving reserve status. And he even said back then, tariffs first, then currency negotiations or unilateral measures, also using security as like a security umbrella to force cooperation by other countries. Now it breaks down. I'm not going to go into it all in detail. I'll put it together. I'll tell you what, I'll do one of my little infographics on it later on. But the 5 steps are tariffs, linked trade to security, century bonds, unilateral measures, coordinated dollar decline.
Century bonds?
Yeah, century bonds. Well, it's like bonds that last 100 years.
I know what they are, but I'm not sure you'd issue them at 8% or wherever we are now. Well, anyway, carry on.
But people will buy them.
Probably, yeah.
Yeah, do you know what I mean? People are buying like Masai Mara bonds. But on face value at the time, everyone laughed at him. I think this actually announced when there was other members of, I think there was like other kind of finance people from around the world at Mar-a-Lago at the time.
Yeah, I think there were, yeah.
I don't think anyone put any, there was no pens on paper, but it was all announced to them. And the idea was it's going to be Trump's version of the Plaza Accord, basically, if I remember correctly. But yeah, it's an interesting one. At the time, we all laughed and said, well, this will never happen. But take a step back, remove your political biases, regardless of what they are. It's kind of not dissimilar to what has played out. False, Michael.
No, I think that does touch on something important. Let's just take a little bit of a step back first of all, because I think the first issue we need to work out and try and get some clarity on is these remarks from Trump yesterday. Was it an off-the-cuff comment that, Trump made to a journalist in a corridor before he went on stage, which is literally where he was speaking, and the market made a little bit of a mountain out of a molehill? Moves were exacerbated because this came up, I think it was like 10-9 last night, so conditions would be a little bit thinner than usual. Or was this a deliberate sort of illustration of the Trump administration's policy? Now, setting aside and notwithstanding the venue where he gave the comments, I am inclined to lean towards it actually being proper sort of policy initiative from the Trump administration. And the reason I say that is because, firstly, this is not new from Trump. Trump has been talking about the dollar being too strong and China, Japan, Korea trying to devalue their currencies. He's been talking about that for donkey's years, even back to the first term. So we know his views on the dollar. He is a dollar bear, if you like. You then look at other parts of the administration, obviously, as you rightly mentioned, Stephen Miron with his paper last year, and you would assume he's going back to the CEA after tonight's Fed meeting, actually, which we'll get onto in a short while. Treasury Secretary Scott Bessent, he has been talking about how trading partners should be strengthening their currencies. Think back to last autumn, when Bessent was talking about how the Bank of Japan need to raise rates much faster in order to bid up the yen, all this kind of stuff. So it's not. And the reason I don't think it's an off-the-cuff comment is because it's in keeping with the broader narrative.
Well, no,
and I think that's important with these sorts of events to go, is it Trump going rogue, or does it fit with everything else we see, we hear, and we read? And actually, this does fit into that broader puzzle, in my view.
Absolutely. And it does tie in with, Bill, like Making America. Trump really wants to kind of reinforce the manufacturing base in the US and become an exporter themselves, with, like homemade stuff. And by making, and this is the right way to do it, right? Because it makes it makes them far more exportable,
attractive.
Yeah, exactly. I lean with you. I don't think this was a completely off the cuff. All right, he maybe could have chosen his words better, but I think the sentiment of what he's saying is dead on what he actually wants to happen, what he believes.
I agree. And the other reason why I'm inclined to lean towards that is because, again, if you zoom out, as we like to do quite often on this sort of program, think about all of the policy aims from the Trump administration on a fiscal side of things. They all seem to have the aim of trying to loosen or ease financial conditions. You think about what the Trump administration did last year with the One Big Beautiful Bill, the tax refunds, the full expensing for R&D, the various exemptions for corporates, loosening financial conditions, pressuring the Fed to cut rates, trying to loosen financial conditions, getting the GSEs to buy mortgage-backed securities, Fannie Mae and Freddie Mac. That is an attempt to loosen financial conditions by bringing down mortgage rates. This idea of a credit card interest rate cap. Now, we know that may be self-defeating, but the reason they're talking about that is because they want to bring down rates. They want to ease financial conditions. What's another way of easing financial conditions? Cheapening the dollar. That is probably one of the easiest and most effective ways of actually easing financial conditions. So again, it feeds into the broader narrative of what the Trump administration are trying to do, which, is effectively underpin and backstop the US economy by having financial conditions as easy as you can get them. And in turn, that's going to backstop and underpin the equity market, in my mind, because you create this really, really strong positive risk backdrop. And that's before you consider, halfway through writing a note on this, that's before you consider the fact that the Treasury is now being run by what you could call a markets person in Scott Bessent, who ran hedge funds for donkey's years. The Fed might soon be run by a markets person if Rick Reeder gets the nod as next Fed chair. I think we're moving into an environment where, and if any economists are listening, I'm sorry, guys, PhD economists are being replaced by people who have the street smarts of how markets operate and will try to jawbone and juice markets in the direction that they want them to go. And as a markets guy, I think it's fucking great.
Yeah, well, no, exactly. At least now you know what. Yeah, again, if you know what the people making the decisions, what way they want markets to go, it becomes a lot easier. Like we know, the White House are out there tweeting that they're basically going to aim for more all-time highs in stocks. It's not up for discussion anymore. You got Trump's basically saying, well, the Mar-a-Lago Accord, which I guarantee that's been the dust is being blown off that book today by people. They actually want a lower dollar. We have had a 15-year bull market in dollar. 50-year bull cycle. Is that ending? Are we looking for? I guess it's a question for you now. Without putting you on the spot, could you see prolonged dollar weakness now? Maybe like a secular bear market, really.
Well, yeah. I mean, I think that just a caveat. I think it's important, not just in this respect, but also in terms of what I was just saying about equities and all the rest of it. Nothing's going to move in a straight line, right? No. Just because the administration are backstopping the stock market, it doesn't mean SPOOs are going to add 30 handles a day or the dollar's going to fall 0.5% a day. However, what I would come back to here, and I actually tweeted this out last night, every market participant, one of the first things you get drummed into you is don't fight the Fed. Everyone involved in markets has heard that phrase. What we basically mean is if the Fed are cutting rates, if the Fed are going to pump QE into the market, why are you going to go short? Because you're trying to fight someone that has unlimited ammunition. And I would say the same thing, don't fight the president. Arguably, the power of the presidency is greater than the power of the Fed. If Trump wants stocks to go up, chances are they're going to go up because they're going to enact policies to make that happen.
Exactly.
If he wants the dollar to weaken, chances are the dollar ain't going to go up. It's going to go down because they're going to enact policies and put pressure on trading partners to accept stronger currencies in order to engineer that dollar weakness. So I think we do need a little bit more clarity on this one. Of course, that would be nice. But right now, I would not want to be long of the dollar based on what we know at 9 o'clock in the morning on the 28th of Jan.
No, quite exactly that. And you mentioned the Fed, and I think this is a good time to now move into obviously FOMC tonight. As we know, and this ties in nicely as well. Another reason why Trump is desperate for a governor to go in or Fed chair to go in that's going to cut rates more because that will weaken the dollar further. But that's not happening just yet. What about tonight, Michael?
Yeah, so obviously we've got the FOMC this evening, as usual, the decision and statement being released at 7 o'clock London time, 2 o'clock this afternoon on the East Coast, followed by Chair Powell's press conference half an hour later. It is the third last meeting that we will have with Powell in the chair, and we are expecting no change to the Fed funds rate. That will be held steady at between 3.5% and 3.75%. Although it is unlikely to be a unanimous vote, you would expect Governor Myron, who we obviously mentioned earlier on, to dissent in favour of a rate cut, possibly as large as 50 basis points. Maybe Governor Bowman would dissent as well. She's been a little bit more dovish in her recent remarks, but everyone else should be in favour of holding rates steady. And the policy statement is likely to be largely unchanged as well, maintaining guidance that alludes to the extent and timing of adjustments to the Fed funds rate going forwards. As for the press conference, I mean, to be honest with you, I think the press conference is going to be a bit awkward because everything that journalists are likely to ask about, whether that be Powell's future, whether that be the DOJ subpoenas, Governor Cook's court case, or even these latest developments in the FX market, Powell is not going to make any comment about any of that. The legal stuff he's obviously going to stay well away from, and any of the foreign exchange matters, well, that's an issue for the Treasury. So Powell will direct questions there. Obviously, participants will look for any hints as to the timing of another rate cut. He's not going to give anything concrete on that, or the conditions that the Fed would want to see in order to deliver another rate cut. But I think it's going to be very much a press conference that sort of emphasizes how the Fed are just in this kind of wait and see mode at the moment. They delivered 3 25 basis point cuts at the back end of last year, and I think they're really just waiting to see what impact that has on the economy, how the inflation outlook evolves, how the labor market evolves. They'll have a lot more data by March. It's another forecast meeting in March, so you may expect a little bit more of a debate around the policy outlook at that stage. But I think you can never say that a Fed meeting or a Fed day is going to be a non-event, because there's always the chance of a surprise. But I would say that tonight could be as close to a non-event as these things ever get.
Absolutely. I think the interesting thing will be all eyes on Trump before or during the speech or before the statement, see if he does come up with a wild card and announce his pick.
Yes.
Again, we're not saying, listeners, we're not saying that this is what we believe is going to happen, but you've got to keep all options on the table. And being Trump, and as we all know what Trump is like, would you really put it past him to not, if he has already made up his mind, not to steal Powell's thunder and announce it just before Powell goes in front of the cameras or whilst he's on front of the cameras? Because you can be sure that if he's given his statement and Trump drops this news, the journalists sat there are going to get alerts on their phone to say this, and then all the questions that potentially the Fed chair is being primed for have gone out the window. And
yeah, Jay, what do you think of Rick Reeder taking your job, et cetera, et cetera, et cetera?
Yeah, we've just heard from Trump saying you're out, Rick Reeder's coming in. What are your thoughts on that? It will fluster him.
Yeah. Oh, of course it will. Just lastly, I did want to mention, because we've got quite a lot of earnings after the close as well tonight. As if there's not enough going on already, we have just over 10% of the S&P by index weighting reporting bang on the close. 3 of the Magnificent 7 names reporting later on. Microsoft, I'm not going to go through all the figures because we'd be here for the rest of the day, but Microsoft, of course, heavy focus there on what's going on with growth in terms of Azure. Microsoft has actually enjoyed a bit of a bounce in the stock price over the last 4 or 5 days. Right on the 200-day moving average actually coming into the earnings report, which is something that we actually don't mind paying attention to in the technical analysis world. So that's one to watch on the close. Meta, meanwhile, participants are going to be looking very closely at the CapEx and OpEx guidance for the year ahead. Basically, how much is the company going to spend on Reality Labs and AI? The implied move in Meta is about 6% in the after-hours session, so pretty punchy. And we also hear from Tesla after the close as well. Of course, Q4 delivery numbers for Tesla were a bit soft, mainly because of the EV tax credit having expired. But participants will be looking at what Tesla outlined for the future. And because it's Tesla, I'm sure they'll probably say that, the full self-driving robo-taxi is 2 days away, when we still haven't actually seen that happen. But if you do have any equity exposure, those earnings are worth watching very, very closely. Absolutely. Not only those single stocks, but also the impact that will have on sentiment more broadly as well. So keep that on the radar later on. But that is absolutely all from me.
Awesome. Well, look, do you know what? Without really trying, we finished dead on 9 o'clock. So that's exactly half an hour, which is what the show's meant to be. It's almost like we're getting good at this.
Consummate professionals.
Well, let's not get carried away. Anyway, well, we'll have beers tomorrow with Tom, with Clive, with some of the KBL lot.
Oh.
It's going to be magical time. So look, tomorrow should be fine, but tune in on Friday's show for two hungover to fuck presenters, I'm guessing.